Hello and welcome to Moneylife. This is Sucheta Dilal. This week, I'm going to talk about where we investors stand as far as the regulator is concerned. The context is a large event that happened in Delhi. It's called World Investor Week. But before I talk about World Investor Week, let me talk about a few other things. Remember, India's investor population has almost doubled since the COVID pandemic. In fact, after March 2020, when people had to stay at home, investors, or rather people who had money to spare, decided that they're going to explore the capital market. And the number of retail investors rose by 1.42 crore in FY 2021 alone. Now, the significance of this becomes evident when I tell you what we have gone through. In fact, India's investor population has been stagnating at 2 crore since about 92-93. In fact, in the mid-90s, until the collapse of Unit Trust of India, because those investors were included, it was about 2 crore. After that, our investor population has been dwindling. In fact, a survey done by SEBI to try and say there are more investors at the turn of the century, 2000-2001, by the National Council of Applied Economic Research also managed to make it only 2.1 crore. It then dropped to 80 lakhs by 2009. And now, in just 1 year, it is 1.42 crore up. I mean, what does this tell you? People have been rushing to the capital market. It's a time for the regulator to just celebrate this, because more investors in the market, more investments, they send stock indices spiraling up. IPOs are being snapped up at dizzying valuations. It is cause for celebration. There is euphoria. And the one event that ought to have been celebrated in big style was what is called the World Investor Week. Now, the World Investor Week is celebrated between November 22nd to 28th, because at the behest of the International Organization of Securities Market Commissions. So IOSCO, which is a body of all investor associations, apparently has decreed this. SEBI, in line with all this, set up a grand pavilion at the India International Center in Delhi called Bharat Ka Share Bazaar to spread awareness and educate investors. It also ensured that all stock exchanges, remember the National Stock Exchange, the Bombay Stock Exchange, the commodity exchanges, depositories, market intermediaries, brokerage firms, mutual funds, broker associations, and even some training schools joined this celebration. Few business schools also possibly came in to bring students and create audiences. Fun time was had by all. SEBI organized quizzes, skits, Muppet shows, and tried to display its investor-friendly policies and facilities. But guess what? The large majority of investors seem not to have been invited to this party. Did you, for instance, know about it? I do a lot of work, but apart from press releases by intermediaries and SEBI and the exchanges, we didn't see any action. In fact, World Investor Week, or WIV as I would call it, WIW, appears to have been a damn squib. In fact, I went and searched on Google and Twitter with appropriate hashtags to find out how many people had reported it. What did investors have to say about it? Did they go to Pragati Maidan? Did they meet SEBI officials? What did they have to say? Drew a blank. The only tweets that I found were by the intermediaries about their stalls and about their events. So the question is, did SEBI and the club of regulated market intermediaries who talk to each other, exclusively engage with each other, create policies, decide what's good for investors, ever even bother to engage investors, talk to them? Did they invite them to the celebration? Surely with 1.42 crore new investors, they would have flocked to the trade fair, right? So I looked at what possibly would have attracted them and what kind of discussions would have been what these investors have been asking us about on social media. Why us? Because Moneylife is an investor-friendly publication. We also run Moneylife Foundation, which is a not-for-profit organization involved in financial literacy and warning people, helping them with grievance redress. So what would have been attractive? Algo trading. In fact, one of the big developments with these new investors is the huge growth in what is called retail algorithm trading or retail algos. It has attracted a majority of the new entrants, and any discussion about this would have been a hit. In fact, a warning on what can happen when badly written algos, meet the big bump in the market when prices go up and down and fluctuate, can decimate investors' wealth. And it is the job of the regulator to warn people about it. But guess what? As I wrote a few weeks ago, if you want to read these articles, we're showing you the hashtags here. Go to Moneylife and read them. In fact, my article was titled, "Why is SEBI Reluctant to Regulate Retail Algos?" In fact, after we wrote about it, when SEBI did not think it was required, it has slowly begun the process of meeting people and even understanding what retail algos is, because they've called various retail algo writers to meet them. So clearly, SEBI is not even in a position to give awareness and literacy lessons to investors, so it was not on the agenda. What was the next big thing that would have attracted investors? This is not exactly under SEBI regulation, but if you ask me, it is a regulator's job to warn people. There are any number of people on social media who've been asking us, what is your view on crypto, cryptocurrency, crypto assets, crypto exchanges? And we have, again, I have written about it. Here are the hashtags. Now, according to SEBI's release, it has actually been doing the job of cautioning investors about illegal money mobilization schemes. Are cryptos legal? No, in fact, the government wants a rule. So it could have warned them about this. It could have even warned them about others like Anugraha, stock and broking, but I'll come to that later. But no sessions on cryptos and crypto exchanges, not even to tell people that they may call themselves an exchange. SEBI regulates exchanges, but they're not under us. They're unregulated. You have to be careful. These digital assets are worrying. Government is dragging its feet on introducing legislation. The only good news is at least it wants to. So WIW was an excellent opportunity to go and do that. In fact, SEBI has recently issued a formal release warning registered debenture trustees and investment advisors not to deal with digital gold. Okay, so why not algos? What else could have been part of this discussion? Well, failed brokerage firms. There is a record of sorts. At the time when the investor population was zooming up, we've had 28 broker defaults on the National Stock Exchange. Yes, the big monopoly exchange, the shining, glittering, highly profitable exchange had 28 broker defaults since 2020. And this is the highest concentration of broker defaults since 1992 when SEBI was actually set up. Has there been any action? So SEBI has been sending out show cause notices, which doesn't help investors at all. And there should have been a discussion. There could have been a meeting with these investors who have lost money. SEBI could have used World Investor Week to tell them what they can do. Nothing of that sort. Then what about commodity trading and derivatives? Now, SEBI's release tells us it has held 47,000 workshops on commodity derivatives. I must confess that this market remains a domain of those who understand commodities, and yet we don't know much about it. The English media has hardly covered commodities. What we do see is press releases from time to time about frequent regulatory action, forensic audits, the ban on certain kinds of derivatives and certain contracts on commodity exchanges. One would say that's good because not many people have gone there. But again, it's a gray area where a celebration of Investor Week should have focused, even to tell us who are these investors and what happens in these markets. I would have been a student of this. Finally, scores, SEBI's redress system. In fact, this was part of the showpiece in Delhi. SEBI's own data says that it has done very well with grievance redress, but every few days I have had to enlighten aggrieved investors on what is the online redress system and give them the website link for going there. Now, investors to these 28 odd failed brokerage firms, Karvi, Anugraha, Modex, BMA Wealth Advisors, haven't received their money. Maybe someone could have met them and shown them how to use scores and what would work. Maybe a nice Muppet show or a quiz would have helped, you think? But I don't think SEBI was focused on broker defaults, though brokers are regulated twice over, first by exchanges and then by the market regulator. So I got around to thinking that maybe SEBI should have done things differently. If it had spent even a tiny fraction of the money or even the interest that it earns on this large pool or corpus of unclaimed investors' money, not government money, investors' money in the form of unclaimed shares, dividends, mutual funds, which is over 20,000 crore in SEBI's control as a sort of investor protection fund. God knows what it's used for. This could have been used to publicize World Investment Week and told people, come and meet us. This is going to be a rare opportunity to meet and engage with SEBI officials of exchanges. I'm sure people would have spent their own money and bought a ticket to Delhi to go and attend. It would have made their trip worthwhile. Well, investors are not really farmers, but I'm still certain that those who lost money, and all of them together are run into thousands of crores. Karvi itself is over 1,000 crores. So Karvi, Anugrah, PMA, all the ones that I mentioned and 25 others certainly have turned up to meet the regulator and flocked the trade fair for World Investor Week. Instead, look at what we have. These investors, especially Anugrah, in spite of an independent, specialized capital market regulator having existed for 30 years with an appellate tribunal, they've had to go to the Bombay Stock Exchange for redress. They are in court. And NSE has filed an affidavit saying that they knowingly invested in a Ponzi scheme, which offered high returns in the guise of derivative advisory services. That is a court battle that's going on. But think about it. Wasn't it NSE's job to regulate Anugraha and ensure that it did not run a Ponzi scheme? Shouldn't it have clamped down on it? Weren't NSE's annual inspections supposed to catch the shady activity on the part of the brokerage firm? After all, NSE is not a crypto exchange that's unregulated. It's regulated by SEBI. What was NSE doing? What was SEBI doing? And how can it be in court saying they knowingly went into a Ponzi when Anugraha is a regulated entity? Let's rewind a little. In 2014, when NSE ought to have been investigating Anugraha's huge increase in trading turnover. I mean, look at the numbers. And again, I have a whole article on it. It was a breathtaking 2,546% increase. NSE should have had alarm bells ringing, done a deep inspection, instead of which it was celebrating this and sending out congratulatory messages. Now it calls it a Ponzi operation and investors are left high and dry. Then there is Karvi. In fact, again, I have written a whole article saying that regulators gave this brokerage firm endless rope and it has 5 or 6 market intermediaries, all regulated by SEBI. It is in every part of the market, in every kind of intermediary that you can think of. In fact, what I've called it in my article is Karvi default shows prolonged regulatory failure. Buck stops at SEBI. So what have investors got? Nothing. Shouldn't SEBI have been meeting them on World Investor Week? No, because the investors didn't know, weren't invited, and by and large, the whole event was rather low-key. Is it any wonder then that investors knew nothing much about World Investor Week? Neither the regulator nor the regulated entities engage with those who have worked at spreading real financial literacy. So doesn't want anyone who could ask awkward questions and tell SEBI, what about your job of grievance redress? If you agree with me, let's work at making the regulator more accountable, because this can't be a nice state of affairs. If you like this video, please share it with other investors. There are 1.42 crore new people who ought to be listening. Thank you. Please subscribe to Moneylife. Thank you.